The final Republican tax bill contains slightly more in tax relief for the middle class than did its earlier versions, but the wealthy remain the biggest winners in the plan, a nonpartisan tax analysis group concluded Monday. The bill will move to the House floor Tuesday after passing through the House Rules Committee on Monday evening. Republicans plan to send it through the House and Senate this week and forward it to President Donald Trump, who for months pushed his party to give him a tax cut bill by Christmas. The GOP bill would lower taxes for 95% of Americans in 2018, but on average the cuts for the highest earners far exceed those of people making less, according to the Tax Policy Center. In 2018, taxpayers earning less than $25,000 would receive an average tax cut of $60, the center found. Those earning between $49,000 and $86,000 would get an average cut of about $900, those earning between $308,000 and $733,000 would receive an average cut of $13,500, and those earning more than $733,000 would receive an average cut of $51,000. In general, higher-income households receive larger average tax cuts as a percentage of after-tax income, the report said. The bill before Congress now is a compromise between a measure the House passed in November and one the Senate passed earlier this month, though it also included some provisions that did not come from either previous version. At the end of every year, millions of Americans can make strategic moves to shave a few bucks off their April tax bill. Right now, millions more should be able to get into the act, with congressional Republicans poised to pass a 503-page law that fundamentally restructures the U.S. tax code. If, at the end of every year, millions of Americans can make strategic moves to shave a few bucks off their April tax bill. Right now, millions more should be able to get into the act, with congressional Republicans poised to pass a 503-page law that fundamentally restructures the U.S. tax code. If, among the three bills, the House bill was most skewed toward the wealthy, while the final version was the least, said Tax Policy Center Director Mark Mazur, who stressed that the bill's many provisions complicate sweeping assessments of its impact. In the final version of the bill, lawmakers reduced the tax rate on income above $1 million, but they also added new benefits for low and middle-income families seeking to take advantage of a newly expanded child tax credit. The Senate bill was a little less regressive than the House bill, and this appears to be a little less regressive than the Senate bill, Mazur said. But, overall, the conference agreement is more regressive than current law. Republicans' tight timing on taxes is self-imposed. Republicans' tight timing on taxes is self-imposed. As written, the bill becomes less generous for individuals in later years, as many of the tax benefits for individuals have set expiration dates. By 2027, 53% of Americans would pay more in taxes, according to the TPC. Republicans have argued that future lawmakers will intervene to stop the cuts from expiring, noting that many of the tax cuts signed into law by President George W.